So this time I want to talk to you about sector rotation and what stocks or industry to be investing in early part of 2025 right now. When you pull up a chart like this one, it's a sector rotation graph. It tells you the blue line is indicating the market, stock market, what the stock market is doing, whereas the green is the actual economy. The stock market is actually looking forward, which means as little as 6 months to 18 months, it's going to peak before the economy actually peaks. And right now, I feel like we have peaked, and we're preparing for either the bear market or possibly a recession. So when you look here at the earlier booming market cycle, you can see what sectors to be in: technology, cyclical, and so on. So if you go into FinBiz and look at the one-day performance, everything was down. But if you look at 1 month, you can see how sectors like financial, healthcare, industrial, consumer defensive are doing better. Of course, for the longest time, money was flowing into all the technology, Mag 7, Apple, Google, and stuff like that. But now you can see where the money's flowing into. So some people are early. As early as 3 months ago, people were piling into these other sectors. But healthcare wasn't that great at the time. But now it's making a move. So that's the part I want to be in. Again, going back to this graph, you can see doors moving towards the bear market or recession. You can see that healthcare is a good industry to be in. Staples, energy, utilities, the same thing. The latter part of the cycle, I definitely want to be in finance. So JP Morgan, Citibank, and stuff like that is where I'm going to be next. But for now, I want to investigate in healthcare. So if you decide that you want to be in healthcare, you can go into XLV. XLV is the ETF made up of all the healthcare stocks. So go into holdings. You can see who's all in it. Eli Lilly is 12%, 13%, close to 13% of XLV. So if you want to be diversified, you don't want to choose which one to go into, you can just put your money in XLV and it should do well next 6 months to a year. But if you want to compare whether to go into Eli Lilly or United Health or Johnson & Johnson or Abbott Laboratories, there's all these different companies you can go into. Okay, so let's say I want to check out Eli Lilly. Then I would go to TradingView and type in LLY and take this out for a second. Okay, Eli Lilly is doing, this is a weekly chart, and you can see it's a weekly chart, so that's like a month now. It's picking up again. And if you want to and then you want to do XLV and see how that's doing. It's been moving down, 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 but now close to 2 months, it's been slowly moving up. So I think it's telling us something. And another way of looking at this is XLV divided by SPY. You can tell compared to SPY, which is S&P 500, XLV was poorly performing, but now again for about almost 2 months in a row now, it's picking up. So XLV seems like where the money is rotating into. Inside that, I can go into Eli Lilly divided by SPY and check it out. Again, it looks like it was underperforming, but it's picking up. Same thing, you can do LLY versus XLV. Even within the sector, you can see how it's doing better. Compared to J&J, let's look at J&J. J&J compared to SPY, it's not as good. J&J compared to XLV, again, it's not really picking up as much. So if I were to choose between all these, I would probably go into LLY. And then if you want to study further, you can go into Yahoo Finance and go look up their chart and their information and so on. Okay, that's it.